Ladies and gentlemen, we're going to be talking about OlympusDao. They're back in the news again. We're going to cover this because I think this article brings up some pretty important questions, in my opinion, related to OlympusDao and the decentralized ecosystem overall. We're also going to be talking about how a prominent YouTuber was attempting to shield this project. And in his attempts to shield the project, I heard something that concerned me. I went to reach out to the OlympusDao team myself. I'm going to share with you that conversation. It was a little bit strange. It was a little bit cagey, and I'm going to bring that to you in this video. First up, OlympusDao's in the news again. I'm trying to put together a cryptocurrency news video for you all. If you like how I cover the cryptocurrency news, be sure to subscribe to the channel because that video is going to be coming up later today or tomorrow. So I was working on that video and I came across this news story and it pushed me over the edge. I thought, okay, I've got to make this video. I have been talking about and I have been thinking about making this video for a very long time. You see, OlympusDao was a project that I liked a lot originally. The idea behind the project was very interesting. A future decentralized reserve currency. If you read right here, Olympus is building OHM, a community-owned, decentralized, and censorship-resistant reserve currency that is deeply liquid, asset-backed, and used widely across Web3. Olympus is a project most people have moved on from, but I think this is incredibly important to understand because I think there's a lot of lessons here in DeFi. And the lessons are that you can only truly trust what you're seeing with your own eyes in the moment. In my opinion, decentralization in crypto is about being trustless, not needing to trust someone. The more I'm needing to apply trust to another entity, of course, we trust devs are doing a good job. Of course, we trust that people have good intentions, but you can only watch the result of their intentions to determine if someone is truly trustworthy. But when you see what happens with Olympus here, it just highlights so many issues. Let's go back to censorship resistant. This entire news article right here is talking about how the OlympusDao team, they essentially stole funds from this guy. An early investor put in $50,000 worth of DAI. He was supposed to get 50,000 POM tokens, and that was a placeholder token. So once OHM went live, he was converting his POM to OHM. His $50,000 in POM ended up becoming worth like $20 million. He started selling the project. He started selling the tokens. Of course he would. He made $20 million. So he started selling some of his tokens, and the team, arguably the leader, Apollo, he rendered the smart contracts inoperable, meaning that he was unable to use the tokens. He was unable to convert his POM to OHM because they did not want him to sell. That means his account was being censored. The whole point in getting in a project is to sell. All of us want to be able to sell for a profit. If a project doesn't want investors to sell, then it has to perform well. A project cannot live and die only on fancy tokenomics. There has to be something a little bit more there long term. In the short term, we always play the tokenomics. That's a tip. If you don't understand that, ladies and gentlemen, in the short term, you always play the tokenomics. If you've been following my channel, I played OlympusDao, and I'm about to get to something crazy here in a minute, but I played OlympusDao's tokenomics. I understood in the white paper, they were backed minimum by $1 or 1 DAI per OHM token. And they actually stated in there that it would fluctuate above $1, but it would not go below $1 because it was backed by 1 DAI, which is a stable coin. Got it. Makes total sense. Well, when I got into the project, it was pretty close to like $1,000 when I got in. The price was. And if you read through the white paper, they said that they expected their price to come down. In fact, they alluded that it would go down all the way towards $1, and it was amazing how many people didn't know that. When I said that in one of my videos, I got so many hate comments, and I just wanted to be like, guys, go read the white paper. The white paper says the APY is high as a form of distributing the tokens. They wanted the tokens to go far and wide. They wanted a high APY to attract a bunch of investors, which they were successful. It did that. The idea was to get these tokens in a bunch of people's hands and eventually get this token down closer to $1 eventually. That was the long-term goal, which it would be backed by $1. And I said back then I thought it would trade at a premium because the way they were working was they created a treasury. They were one of the first projects to actually ever own their liquidity. And it was incredibly interesting. And I don't want to break down how that worked, but essentially they had a treasury that was producing revenue for them, and that treasury was an independent business that was growing in value year after year. The liquidity alone was bringing in somewhere between 10 to 25% APY, which means OHM would be able to maintain that peg because the treasury would always be able to back the OHM token, and the OHM token essentially could even go up in numbers in circulation, meaning they could print more Ohm tokens, but those tokens could still be backed by roughly one DAI. That is an incredible concept. Now, the OlympusDao team, to their credit, they actually went on and created multiple businesses. And I mean, they were bringing in millions, still are bringing in millions of dollars every year based on their treasury. Let's keep going. I was following Jesse actually before he was into crypto. I actually can remember some of his early crypto videos that he made. So I started watching some of his cryptocurrency content. You can kind of tell when someone's learning about crypto, especially if you've been in this space for a minute. He had covered OlympusDao, and this is some time later when the token price had dropped quite a bit. And keep in mind, at one point, the OlympusDao token was $1,300. And it was always going to drop because it was high APY. Any of these projects that have an enormous APY, over time, the price will drop. Always. It doesn't mean you can't make money with the projects. It just means the token prices are going to drop eventually. And there is a belief. The belief is if you hold the token, the inflation will actually be a beneficiary to you. Over time, that is not true. Once inflation reaches the size of the market, from that point forward, the price will drop faster then you're going to be able to gain value in the token. So you end up being a net loser. And that's exactly what happened with OlympusDao. But I want you to listen carefully what Jesse said, because he was being positive about the project. But when he said this, I thought, wait, what did he just say? That cannot be right. Here's what he said.
But I had two really big questions that I really wanted to ask the team. The first one was surrounding around what would happen if Olympus hit its backing per ohm. I'd gotten a lot of
So this was a great question. A lot of people were trying to figure out how this was working. I thought it was such a no-brainer that I didn't even realize that we should question this. And I had a commenter on one of my videos says there's no way to redeem the Ohm token for DAI. So how is it backed? And I thought, yeah, I guess you're right. There is no way to redeem it. So I just assumed the team must have a mechanism. Keep in mind, the website says that it is an asset-backed decentralized reserve currency. Decentralized reserve currency, meaning that it was designed to be a long-term store of value, essentially. That's what a reliable currency, that's what a reserve currency is. It was backed by something to basically guarantee its value, essentially. That's what asset-backed means. So he's saying basically what would happen if the price dropped below peg. So if you come inside the app on OlympusDao, you see this is the current Ohm price. Keep in mind, this thing used to be $1,300. They're saying their treasury right now has $18 per Ohm token, but they're still expanding the supply. But basically, there's $18 per Ohm token backed, but each token is trading at a premium because they're trading at $27. And they have an APY that continues to expand the token supply even to this day. The question was, what happens when this Ohm price drops below $18? It was always a little bit fuzzy. Are they going to do something when it drops below $18 or when it drops below $1? That was the real question. No one thought that they weren't going to back it. I mean, that was the whole premise. So you assumed this liquid backing per ohm is basically telling you how much value is in the treasury based on how many tokens are in circulation. And the white paper only alluded to 1 DAI per ohm token, but right here you can see that they have enough backing, $18. Now, my original belief was that the supply is going to continue to expand, and eventually it's going to be $1, and that's going to be where if the price drops below $1, it will be there, and that's probably when they'll act. That was my thinking. Most people said I was wrong. Most people said they were going to act if it dropped below $18, and this is Jesse asking that very question. What's going to happen? Listen to this carefully.
Various theories from a lot of people on what would happen if Olympus hit its backing per ohm, but nobody seemed to know for sure. Most people seem to think that if the price of ohm hit the backing per ohm, then Olympus would sell assets from the treasury and buy back their own tokens so that the price would never dip below that backing price. The person I was speaking with connected me with Olympus's official policy team to get an exact answer on exactly what would happen. Their answer was really simple, and it was actually the opposite of what everyone had told me. And that was that the price of ohm can go below the backing price, but that the backing price is just its innate value. That made a...
Did you catch that? The price could go below the backing price. The backing price was just its innate value. What does that actually mean? So when are they going to back it, right? If it's a backing per ohm, when are they actually going to provide the backing?
A lot of sense to me, and a really easy example if you want to understand how that works would be in the stock market. If you had a company that had $1 billion in cash,
by the way, I could not understand why Jesse Eckel would say this made sense to him. Like, how can you say something is asset backed, but they say no, they're not going to provide the backing? And when I heard this, I thought, okay, he's just he doesn't know, like he doesn't understand the stock market. Based on what he's about to say here, he doesn't understand how that works. He doesn't understand financial regulations, financial laws. So I got it. And that's the challenge. There's a lot of people still trying to figure out crypto. Not only is the technology evolving, but we also have a very mature financial world that most people are not aware of.
They had $1 billion in cash. They had $1 billion in the bank in cash, but say the stock of that company crashed and the market cap of that company fell below $1 billion. That can happen in the stock market, and it does happen from time to time where the price of a company falls below the amount of cash they have in the bank. Of course,
for the record, I don't personally know of any time in history that's actually happened. Theoretically, it could happen, but I don't know any time in history. Has been a time or two when a company's stock has fell below their assets, but as far as falling all the way down below the cash they have in the bank, I don't think that literally. I mean, if someone has an example, please put it in the comments because I love to look it up. I actually don't think it's ever happened. And he didn't. I was waiting for him to name an example like the time it happened with XYZ company. And he just kind of threw it out there, but he didn't give anything else. So, I invite Jesse, I invite anybody else in the comments. If you know a company whose stock market, the stock value has literally dropped, not below their assets, below the cash they have in the bank, I would love to know that. I don't think it's ever actually happened. And there's reasons it hasn't happened, by the way.
The market always ends up correcting that situation because it is kind of an absurd situation where people are valuing a company at a price below the amount of cash that company actually holds. So the price of Olympus can fall below its backing. They will not liquidate the treasury to bring it back up, but instead they rely in the market to bring the price back up because it's just a situation that doesn't make sense and is pretty odd.
It is an absurd situation, but the difference is in the stock market, the CEOs, the executives, oftentimes their compensation is directly tied to the success of the stock. Oftentimes, they're holding a significant portion of stock. A lot of their compensation is in stock. So the stock performance is incredibly important to the executives themselves, the CEOs, and that sort of thing of publicly traded companies. There's also a lot of legal regulation around their responsibilities to shareholders as CEOs. So this isn't even a good comparison. In fact, it's really bad. It's not necessarily Jesse's fault because I understand, like if you're trying to learn and you hear that, then I do understand how you can think that makes sense. I want to continue on because he went on to talk about the APY. I think a lot of people don't understand when you increase supply, you decrease price. And he talked about that next.
And my last question was a pretty big one, and I think it's one a lot of us have been asking about Olympus, and that's why hasn't the APY gone back up? I think all of us were kind of under the assumption that if the price were to fall rapidly like we're experiencing right now, that the APY for Olympus would jump up significantly to kind of offset that price dip. So,
ladies and gentlemen, he said that he thought the APY would bounce up. I don't know, that was not in the white paper. To OlympusDao's credit, people might have been assuming that, but first of all, that will never work for any length of time. You cannot outprint. I mean, that's what inflation is. You're going to decrease the value of Olympus by just trying to print more faster. That's always what happens long term if there's not some sort of market force to counteract that. But let's listen to this explanation.
So I was really curious about this because not only has the APY not gone up with this price drop, but it's actually gone down quite a bit. And basically,
it was in the white paper, ladies and gentlemen. The APY was never, ever going to go up.
The answer was really simple. The community for OlympusDao, the governance structure for OlympusDao, had a vote and they voted to lower the APY, and that vote overrided any previous policy. So the previous policy that the APY would go up got overridden by this governance vote that is now reduced.
Again, I think Jesse just was misinformed here. There was never, ever, ever, ever a policy that OlympusDao was going to raise APY over price dropping. That, just to OlympusDao's credit, that was never a policy. Now, they did have some points in time when they planned to lower the APY, and that was a whole goal over time, to create a lower and lower APY, to create a project that was going to have a good use case as a decentralized autonomous network, decentralized, censorship resistant. And I think what we're seeing here, by the way, is that they weren't censorship resistant and they haven't really been decentralized. So the question comes down to, are they asset backed? Now, Jesse said that they weren't going to liquidate the treasury, and I actually thought he was wrong. I thought there's no way that's right. That doesn't make sense. That destroys the entire project. What's the point in having the project? I reached out to the OlympusDao team. Shout out to this person here, Maddox actually approached me on Discord, and he said, hey, I want to get you in contact with the communications team. And the first thing I wanted to know was, did they speak to Jesse Eckel? And I mean, I hated to doubt him. I like Jesse. I've been a subscriber to his for a while. But what he was saying didn't make sense. And I thought there's no way this team told him that the Treasury does not back the token. Like, there's no way. Like, I reached out to them, and I just got to tell you, it was a strange conversation. I would like to know if this guy, Jesse Eckel, actually spoke to someone in the policy team. They ended up confirming. And then my next question was, hi, fellas, could you explain exactly what the purpose in the Treasury is for in Olympus? Because the moment they confirmed that they had spoken to Jesse, I thought, okay, so now I believe he really spoke to them and they told him this. But I didn't want to put words in their mouth. I wanted to see what they were going to tell me. And so this gets crazy. The purpose of the Treasury is to be used to facilitate healthy market behaviors, asset flows, leverage, etc. But I thought to myself, he did not say the purpose in the Treasury is to provide a backing. Then they're telling me if I want to know more to go read the white paper, which I had already read multiple times. I didn't need to read the white paper. In fact, I was pretty certain by the end of this that they hadn't read their own white paper. Sorry you haven't seen any of my videos. And the reason I said that is because they would have understood I didn't need to read the white paper. I fully get what the Treasury is doing for the ecosystem and the services it provides. I find it to be an absolute interesting model how you all have owned your own liquidity. And I do. To this day, I think that's an incredible model. And you build up your treasury. It is literally a business and economic marvel to me from that perspective. I told them this is the part that I struggle with, and I got this definition of reserve assets. I think I pulled this off of Google or something. Reserve assets serve as a trusted backing. So you've got to be able to provide trust in some way, and you've got to be able to back the project or back the token. The currency is viewed as reliable and relatively low risk, which encourages entities to hold large quantities of it in reserve. Then they could bring back with this, just so I'm clear on the ask. How are you defining backing in context? When I read this, I thought, what are you talking about? More specifically, do you mean backing as in the assets in Olympus Treasury per ohm, or backing as in the ohm held in reserve by other people protocol treasuries? That second part made no sense to the context of what the project was supposed to be. Of course, I'm talking about backing as in the treasury per ohm. And so I came and said backing to ohm. How exactly does the treasury provide backing to the ohm? And it gets really wild. Bonds, LP fees, farming, currently favorable protocol, treasury swaps, etc. are all possible. And I said, this is how the treasury grows. Like, this is how the treasury makes money. But what is the functional way that me as an investor know that the treasury is backing ohm? You're telling me that it is backed. This is a blockchain, so I should not need the assurances. But let's just say that my wife, who is not crypto savvy but understands investing very well, I tell her I want to put 100,000 USD into ohm. I tell her the goal is for ohm to be a reserve asset currency, and each ohm is backed by this treasury. When she says, how do you know each ohm is backed by the treasury? What can I tell her? I was really struggling with communication with these guys, and this was a communication team. Maybe this is easier. The white paper says ohm is backed by at least one DAI. If the price of ohm ever falls below one DAI, how do we know as investors, how do I know it will or should go back to one DAI or higher? How do we know it's backed? What is our assurances that we know that this thing is going to work? Buybacks are below $1 and will be done programmatically. Now I started thinking, okay, so we've just been miscommunicating. There's a way. This is already built in to happen. And this is where I think the real scandal unfolds a little bit. And I said, what does programmatically mean exactly? He says via smart contract. I say, can you send me that code or a link to where I can see that code? Now, I don't know exactly how to read the code. I can read enough to be dangerous, but I do know of someone I can send the code to who can let me know what's happening. So he sends me this code, and he said that should be the correct one. Then they said it should be line 577. So I went to line 577. Where does the code show that the buybacks are done below $1? That was the thing. Where are the buybacks? And then he tells me I'm not fully up to speed on the new treasury code. Come to find out, if you keep reading, essentially the code's been changed. Since launch, the code got changed and they no longer provide the backing. Now, I have a guess on why this might have happened, but there was a code change, and that code change was never talked about publicly. It was never discussed in a Medium article that I'm aware of, and most people were not aware of this at all. So they showed me the GitHub, and I said, let me be clear. Backing means reinforced value. Like, I had to keep bringing this stuff up. When you say that the ohm is a reserve currency asset backed, not pegged to one DAI, the understanding of that is that every ohm should be backed by no less than $1 in treasury assets. Please show me any area in economics or finance where backing does not mean there is a dependable asset reinforcing a value. See, they were trying to tell me that my definition of backing didn't exist in their project, but it was still backed because, like Jesse Eckel said, it just made sense. It just made sense. So therefore, the market should correct itself. Let me just keep going. The market operations that the Treasury does are totally separate right here. Even though the market operations that the Treasury does are totally separate from the Ohm token price, I'm realizing that people are bonding, giving to a Treasury, getting a token back. But that token that we are getting is totally separate from what happens with the Treasury. We get essentially a worthless token back by giving them liquidity assets, but we get nothing in return for that except an APY that's going to drive the price down, which would have been fine if the Treasury, that the assets we were given would have went to work to produce a return, and that return should use to be the backstop at $1 per token. That would have been okay to me. That was the whole expected outcome of the project. That was my understanding of the project from the very beginning. I said, how in the world can the Treasury provide backing if there's no clear, easy way for the investor to access the backing? I said, basically what you're saying is the Treasury is here using its value to back the Ohm token. But if the backing was ever actually needed from the Treasury to do what it was supposed to do, back the Ohm token, then it may not be accessible to the investors of the Ohm token. You said market operations of the Treasury does impact price in a real way. That is where I struggle. In what real way does the Treasury actually impact price? You see, in the stock market, as I told you earlier, you own an underlying asset. When you own a piece of stock, you have a legal right. If the company goes bankrupt, you actually have legal rights as a shareholder. But here, when you own the Ohm tokens, you have no legal rights. You have no access to the Treasury, nor will you ever get access to the Treasury, and in no circumstances will that Treasury affect you. The team owns the Treasury. They're making money. This is scandalous to me. Now, this is where it gets very interesting, and this is where I get an inkling on why the project may have changed. So he says, what do you mean by investors accessing backing? It feels like there's a disconnect in the intention of Olympus. Olympus doesn't have investors anymore, in my opinion. Of course, no one actually cares about his opinion. We all saw ourselves as investors. It has market participants. Same thing, except there's a legal subtle difference. Participants may view their action in the economy as investments, but that's not really the focus. The objective of Olympus isn't to make money for investors like an investment fund. It's to become an economy, which transactions, purchases, sales, and investments can be built on top of. To provide direct redeemability to holders would become more like an investment fund than an economy. See, this economy argument, many of you reading this or watching this would be like, economy, that doesn't make any sense. You're not actually building anything on the Olympus token. You're building something on the Treasury. But again, the Treasury's not attached to the token. I believe this comes from a lawyer. This is legal speak. We don't need investors because that starts getting in regulatory issues. Now you're going to become an unregistered security. Backing is defined as support. I agree with that. The Treasury supports the Ohm token and economy first and foremost. A long-term healthy price is a derivative of a healthy economy, same as any currency. See the double speak here? He says the Treasury supports the Ohm token, but the way it supports it is by providing a healthy economy. But that healthy economy, and in no way, shape, or form, actually has a direct relation to the Ohm token. Do you see where this is going? They said in extreme circumstances, direct price support may be warranted, buying back below $1, for example, but it is a last resort. Look no further than the failed forks of Olympus to see why a healthy economy is vastly more important than a nice-looking price. Very few of them are actually using the Treasury properly to maintain a healthy economy. Many are using market buyback tools to make price go up, but aren't doing anything to improve underlying conditions. Well, he has a point here. Most of the forks here are trying to do buybacks, but it's really wild how dumb a developer is to use funds to buy back at a lower rate than the supply of your token is expanding. I mean, that's not going to move the price long term. But again, if it's going to provide backing and provide support, below $1 was the point that it does that. And the reason it would have worked in this case is because there would have been enough dollars in the Treasury to buy back every Olympus token. So theoretically, what would happen is they bought back the tokens, or they don't got to buy back the tokens at all. They just need a place for people to redeem one DAI per token on their website. They hold the Treasury. That Treasury is redeemable for $1. If that was there, what would happen is it would be trusted. And over time, it would maintain that dollar peg because there was always backing. Sure, there are going to be people who doubt it. Sure, there are going to be people who are going to redeem one Ohm for one DAI. That's always a risk. But it's not like everybody's going to do that. But think about it for a minute, ladies and gentlemen. The way they have it set up right now, by not providing any backing at all, they have access to the treasury, they own the treasury, and they can use that treasury for absolutely anything that they want forever. That's crazy. It's essentially their ownership. And by the way, this isn't decentralized, and the fact that they get to determine if and when inverse bonds get implemented, should they ever get implemented, they get to determine when and if the treasury backs the Ohm token, providing price support. They get to make that determination. Again, this isn't decentralized. But what you explained is the treasury is the business. The token is a represented value with an interesting APY mechanic. If the token really tanks to $1, then there are things the DAO can do that may support the price, but are not necessarily guarantee that. And he comes here and says, what makes you say the token isn't a reserve currency asset? I found this so wild. Does he really not understand what a reserve currency asset is? Just because Olympus doesn't have a fixed price button doesn't mean it's not capable of being a reserve currency. He said, okay, I just want to be clear though. The treasury and the Ohm price are only correlated to the extent that the Ohm investors/market agrees that it is. And should the price tank below $1, at least are some measures that could be in place to provide backing. But that decision would be made at that time, correct? And he said, you got it. And I said, who would I count on to be adding these in place? And he said, the community and the multisig. The multisig being the developers. Don't forget the activities the treasury will do to promote the market to trade below $1 in the first place. Again, they keep making the same correlation that Jesse Eckel mentioned. Don't forget, the treasury is growing. It has value. The value of the treasury does not matter if there's not some sort of connection. I can give you feathers and tell you that those feathers represent some value in my business. You know, every feather represents $1. And I got $1 million business, so you got 1 million feathers. Congratulations. But if those feathers give you no authority, no assurances, no guarantees, no representative value of any kind, they're just feathers. You're going to trade those feathers to somebody else and say, hey, he has $1 million business. You've got 500,000 feathers. That's awesome. But you don't get anything for those feathers. You don't get revenue for those feathers. You get nothing. How can you guarantee that those feathers have a $1 value? You can't, because they don't. Hope you see now that the treasury is used for a lot more than just waiting for Ohm to hit $1. This guy was hung up on this, and he could not articulate himself because there was nothing to articulate. There was no connection. The Ohm token is feathers. I said, for Ohm holders, that's all that matters. Unfortunately, very little else was covered here today. I already covered that the treasury was highly profitable. I think the problem is a very small percentage of Ohm investors would consider these mechanics sufficient to serve as a backing for a reserve asset, but they can decide that for themselves. Sorry you feel that we didn't cover much. I went into important points on the wider economy, but it was irrelevant. I mean, can the project make money? I think it's making money hand over fist, because now they have unfettered access to their own treasury. And they kept asking me, is there anything else we can do for you? And I said, all that matters to the Ohm holders is how the token is backed. You gave lots of details. I'm just willing to bet the vast majority of investors find this project insufficient. So now we wonder why Olympus price is dropping and why it's going to continue to drop. The token supply is going to continue to drop above the backing. I think the backing eventually is going to go to $1, and it will be interesting to see what happens there once that happens. But ladies and gentlemen, keep in mind, in a new project, play the tokenomics. Don't play the use case. Use cases have to be proven over time. This whole article is about, should the founder be doxxed, and was he trying to commit a crime and hide behind his identity? Maybe. But it starts to beg a question to me, and that is, are we relying too much on trust in DeFi? Or should we get back to the roots of creating more trustless smart contracts? I would love to hear your thoughts down in the comments. Thank you so much for watching, ladies and gentlemen. If you like this type of content, do me a favor and smash that subscribe button. Click the like button. Thank you for watching. Decentralized cryptocurrency. I truly believe, truly decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.